Debt can sneak up on anyone. Some financial decisions may seem minor or even beneficial at first, but they can lead to a dangerous cycle of borrowing and repayment. While some types of debt, like a mortgage or student loans, can be strategic, others can silently drain your finances and keep you trapped in a cycle of payments. Here are 10 common debt traps that may seem harmless but can actually be financially dangerous. 1. Minimum credit card payments. Paying only the minimum amount due on a credit card each month may seem like a way to stay on top of payments, but it's a trap. Credit card companies charge high interest rates, often exceeding 20% annually. If you only pay the minimum, most of your payment goes toward interest, not the actual debt, leading to years of unnecessary payments. 2. Buy now, pay later, BNPL, plans. BNPL services like Afterpay, Klarna, and Affirm allow consumers to split purchases into smaller payments, making expensive items seem more affordable. However, these plans encourage overspending, and missing payments can lead to late fees, increased interest rates, and damage to your credit score. It's still debt, even if it feels convenient. 3. Payday loans and cash advances. Payday loans promise quick cash, but they come with extreme interest rates, sometimes exceeding 400% APR. Even if you repay the loan on time, you may find yourself needing another just to cover basic expenses. This creates a debt cycle that's hard to break. 4. Extended auto loans. Many car buyers choose long-term auto loans, 72 or 84 months, to get lower monthly payments. While this might seem like a smart move, it keeps you paying for the car long after it has lost value. Worse, extended loans mean more interest paid over time, making the vehicle significantly more expensive than its sticker price. 5. Store credit cards with discounts. Retailers offer store-branded credit cards with attractive perks like 10% off your first purchase, but these cards often come with higher interest rates than regular credit cards. If you carry a balance, you'll lose more in interest than you saved from the initial discount. 6. 0% interest financing that isn't really free. Some companies advertise 0% interest financing for a set period, but they often have deferred interest clauses. If you miss a single payment or don't pay off the balance by the end of the promotional period, you'll get hit with backdated interest on the entire amount, making it far more expensive than expected. 7. Subscription-based services that add up. Streaming platforms, fitness apps, meal kits, and subscription boxes may not seem like debt, but they slowly drain your budget. A few $10 to $20 subscriptions might not feel like much, but when added together, they can cost hundreds per year. Forgetting to cancel free trials can also result in unwanted charges. 8. Co-signing loans for others. Helping a friend or family member by co-signing a loan may seem like an act of kindness, but it makes you legally responsible for the debt. If the borrower fails to pay, lenders will come after you for the full amount. It also impacts your credit score, making it harder for you to qualify for future loans. 9. Refinancing without understanding the costs. Refinancing loans can lower payments, but many borrowers fail to account for hidden fees, longer repayment terms, or higher interest rates over time. Extending a loan may provide short-term relief but can cost thousands more in the long run. Always calculate the total cost before refinancing. 10. Lifestyle inflation. As incomes rise, many people increase their spending instead of saving. This often leads to taking on more car loans, credit card debt, and unnecessary expenses. Without proper budgeting, lifestyle inflation can keep you living paycheck to paycheck, even with a higher salary. Many debt traps appear harmless at first but can have serious long-term consequences. Avoiding them requires awareness, financial discipline, and smart money management. By recognizing these pitfalls early, you can stay in control of your finances and build a more secure future.